Attention financial advisors, wealth management firms, and family offices. Do you manage the assets of high net worth accredited individual investors? Do you currently have a more aggressive fixed income investment strategy for 2025? Would your investors appreciate a fixed return of 8% APY prorated over 12 monthly payments? Would your investors appreciate a maximum investment term of 3 years at 8% APY totaling 24%? Would your investors also appreciate it if that same 3-year investment offered a one-time lump sum return of an additional 10.5% at maturity for a combined overall return of 34.5%? Have you noticed all the real estate development and construction going on in neighborhoods and vertical housing markets all around you? It's true. Single-family subdivisions, townhomes, and condominiums are popping up coast to coast, and in the process are driving a surge in the housing markets, creating consistent jobs for the building trades and stimulating regional economies. Your investors can capitalize on this, but how? You can talk to Builders Commercial Capital Group, or BCCG, about our passive, high-yield, short-term, real estate-secured, fixed-income investment opportunities. BCCG is a commercial mortgage banking firm representing local construction companies, real estate developers, and home builders undertaking great projects that can offer you and your investors significant returns. Local, regional, and national banks have tightened their criteria for approving construction loans, which has made it more difficult for our builders and developers to obtain development and construction loans like before. Thus, many real estate developers are turning to the private investor marketplace in pursuit of capital to complete their projects. This strategically positions BCCG to present these projects to private investors seeking outstanding, high-yield real estate investment opportunities. These short-term residential development and construction projects consist of small-scale, single-family new construction or fix-and-flip projects, high-end luxury home construction projects, multifamily condominium conversions, subdivisions, townhome communities, and low, mid, and high-rise condominium buildings. The sale of the builder's inventory of single-family homes, townhomes, or condominiums will be the sole source for both the loan repayment and the remittance of the return on investment. These projects vary in size, scope, scale, and market, and will have capital requirements that easily range from $1 million up to $150 million. However, BCCG simplifies the capital raising process by using loan syndication to divide any given loan note into a maximum of 300 smaller mortgage shares to accommodate multiple investment firms or family offices willing to participate. Syndication allows each firm to fractionally co-invest in the note by acquiring the desired amount mortgage shares to make measured, risk-adjusted stakes in the note investment, according to their respective investment objectives and preferences, which may vary from firm to firm. These mortgage shares in the note are referred to as loan participation notes, or LPNs for short, at a standard offering price of $500,000 each. The number of LPNs issued to finance an underlying loan will vary from at least 2 to a maximum of 300, depending on a project's specific capital requirements. The LPNs are offered to accredited investors as real estate private placements under registration exemption promulgated under Rule 506 of Regulation D of the Securities Registration Act of 1933. These privately placed, non-securitized commercial mortgage notes function similarly to how collateralized mortgage obligations, CMOs, function in publicly traded commercial mortgage-backed securities on Wall Street. The notes, as offered by BCCG, are structured as direct participation private debt investments. This means participating investors agree to jointly purchase the commercial paper sold by BCCG to finance the builder or developer's construction loan. Note investors do not invest in or through BCCG, nor do they invest in the builder's operating entity in any way whatsoever. BCCG is simply a commercial mortgage banker selling the commercial real estate notes we originate to finance construction loans. BCCG is not a sponsor of a hedge fund, mutual fund, pooled mortgage investment fund, limited partnership, REIT, or other investment vehicle. There are no stock purchases, joint ventures, limited partnership with or between the investors, BCCG, or the builder. Every loan participation note sold to investors comes with 3 distinct remittance schedules during the investment term. 1. Investors receive uninterrupted, prorated, monthly interest-only payments from the developer until the homes or condos are sold. 2. Investors receive the repayment of the principal note investment at maturity, whereas the maturity date equals the sale of the homes or condos. 3. Investors receive an immediate remittance of a fixed-rate, one-time lump sum profit participation interest payment of 10.5% of the principal note investment that is due and payable at maturity. The investment premise is simple. Your investors will capitalize on the profit margin that exists between the developer's cost to build and the highest market-supported retail price point at which the newly built inventory of homes will be sold for. BCCG's commercial mortgage note investments offer typical investment terms of 1, 2, or a maximum of 3 years. All notes secured and collateralized by the underlying Class A or Class B, single-family homes, subdivisions, townhomes, and condominium communities to be built by the developer. The notes are underwritten and structured to provide a fixed rate of return based on today's WSJ prime rate of 8% APY for the entire investment term, totaling a maximum of 24%, which is prorated over 12, 24, or a maximum of 36 monthly interest-only payments, and paid to the investors every month. The notes are underwritten to provide investors with an additional 10.5% at maturity, the end of the 3-year note term, making a combined total remittance schedule of 34.5% per the note investment. These commercial real estate notes and the underlying commercial mortgage loan transaction are underwritten in a first lien position at up to 85% of the value of the properties that collateralize the note. As mortgage bankers, BCCG performs comprehensive due diligence on the builder, the project, the market, and the exit strategy to ensure that investment firms can make well-informed investment decisions after reviewing the due diligence exhibits. You and your investors will appreciate these commercial real estate investments for their direct connection to local housing markets while providing tangible evidence of seeing their investment capital being put to work. Additionally, you and your investors will also appreciate that BCCG uses independent third-party firms to manage and safeguard your investment capital from start to finish. Firstly, BCCG uses a local, licensed escrow and title company to serve as the custodial trustee of all note investment funds, deposited and held in escrow for the funding and closing of each loan. Please note that BCCG has no access to or control over note investment funds deposited and held in escrow. Secondly, an independent construction loan disbursement administrator will manage the disbursement schedule, in which the investor's funds will be advanced to the project, according to a monthly budget set by the project manager. Additionally, an independent construction site inspector will make random site visits between each disbursement to audit the previous disbursement's cost coverage for materials, labor, and on-site project management. The construction site inspector will provide an audit report, which will contain photos, videos, checklists, and site review notes to BCCG and the title company, recommending the authorization of the next disbursement based upon the developer passing the site review with a 95% audit score or better. And thirdly, the note will be serviced by an independent, well-established loan servicing company responsible for collecting the builder's monthly payments and remitting them to the investors. Every commercial real estate note sale is structured to facilitate a RESPA-compliant commercial mortgage loan funding and closing transaction that is overseen by a local commercial real estate attorney and title company. Now, this is just an introductory overview of BCCG's commercial real estate note investment opportunities. A fully detailed introductory packet is available for your review. It will provide more information about BCCG, our real estate attorney, the title company, and examples of typical investment scenarios. Actual investment summaries of both small-scale and large-scale real estate investment opportunities are also available for review after you complete a short online opt-in registration form. The investment summaries will introduce the project, the market, the developer, the project team, the exit strategy, and access to viewing the plans, permits, appraisals, loan documents, title work, and copies of every other due diligence exhibit available for your review. Now, grab a pen and jot down the web address that appears on screen. It will take you to our landing page where you can learn more about BCCG, download our investor information packet, read the FAQs, view typical investment scenarios, request opt-in access to view investment summaries of upcoming projects, and to book an appointment to speak with our investor relations manager about working together to give your investors some great returns. Thanks for your time today.